All right, let's talk about the stock market. You hear about it all the time, right? It's this massive, powerful force in our economy, but for so many of us, it just feels like a total mystery. Well, we're going to change that today.
So, have you ever felt like the stock market has its own secret language? You hear people throwing around terms like bulls and bears, and it's easy to feel like you're on the outside looking in. Trust me, you are not alone. Our goal right now is to translate all of that, to make this whole thing simple and crystal clear.
Okay, so here's our game plan. We're going to cover what the stock market even is, why it exists in the first place, then get into its ups and downs. After that, we'll cover a couple of key terms for your toolkit and wrap up with your very first steps. Let's do this.
All right, first things first. Let's start with the absolute basics. Before we can even talk about the stock market, we have to understand the most fundamental piece of the puzzle, the stock itself.
So, what in the world is a stock? Honestly, it's simpler than it sounds. A stock is just a tiny piece of ownership in a company. Think about it like this. Imagine your favorite pizza place. If they decided to sell off tiny slices of the whole business and you bought one, well, you would literally own a piece of that pizza shop. That's a stock. It's one slice of the company pie.
Okay, so if a stock is a piece of a company, where do you go to buy and sell these pieces? You guessed it, that's the stock market. It's basically a giant marketplace. And it's not really a physical place with people shouting anymore. Now it's this huge global digital network where millions of people are buying and selling those little slices of companies all day, every day.
But why? Why does this whole thing even exist? Well, it turns out it's like a two-way street that's super important for both companies and for people like you and me.
This really breaks it down perfectly. See, on one side, you've got companies. They sell these little pieces of themselves, stocks, to raise money. Cash they need to grow, build cool new products, or hire more people. And on the other side, that's us. People buy those stocks to, make money. We're betting on that company's success, hoping our little piece grows in value over time. It's a really cool system that helps everyone grow.
Right. That, as anyone who's ever watched the news knows, the market is, it's not exactly a smooth ride, is it? It goes up, it goes down. So let's talk about what's actually causing all that movement.
It can seem totally random, but it's really not. Stock prices move for some pretty logical reasons. Things like basic supply and demand, how well a company is actually doing, big news events, heck, even the state of the overall economy. All this stuff influences how people feel, which in turn determines if they're buying or selling.
Now, when it comes to these price movements, people generally fall into two camps: investing and trading. Investors are playing the long game. They're buying a piece of a business they believe in, and they plan to hold on for years. Traders, they're focused on the short-term bounces, trying to make a quick profit on those price moves. And, as you can probably guess, that's usually a much riskier way to go. So, if the market is so unpredictable, how do smart people manage all that risk? Well, it comes down to a really famous idea. Don't put all your eggs in one basket. That's called diversification. Instead of betting everything on just one company, you own tiny pieces of lots of different companies. That way, if one of them has a bad day, it doesn't sink your whole ship. It's all about smoothing out the ride for the long haul.
Okay, you're doing great. You've got the big ideas down. Now let's just add two key terms to your investing toolkit. You're going to hear these words a lot, so let's make sure you know exactly what they mean.
First one is portfolio. I know, it sounds kind of fancy, right? But it's actually super simple. Your portfolio is just everything you own. It's the whole collection of all your different investments. If you have a stock from Apple and a stock from Google, boom, that's your portfolio.
And the second term is index. The best way to think about an index is like a thermometer for the stock market. You've probably heard of the S&P 500, right? That's an index. It just tracks a big group of stocks, in this case 500 of the biggest companies, to give you a quick reading on how the market is doing overall. Is the market having a good day or a bad day? Just check the index.
Okay, so we've covered the what and the why. We've even got some key terms down. Now for the really important part. How do you actually get started? The good news is it's probably way more manageable than you think.
Here it is, your first 4 steps. Number 1, open a brokerage account. That's just the account you use to buy and sell stocks. Number 2, and this is so important, start small. You absolutely do not need a ton of money to begin. Just start with whatever you're comfortable with. 3, try to invest consistently over time. And 4, always think long-term. You're planting a tree, not day trading.
And this piece of advice really says it all. Investing is a journey. Learn first, invest carefully, and avoid hype. It's not a race, You're here to learn, to be thoughtful about your choices, and to tune out all the crazy noise and hype. Remember, this is a marathon, not a sprint.
So, there you have it. We've just cracked the code on the stock market. You now have the building blocks, the foundation. The big question isn't what is the stock market anymore. The real question is, now that you have this knowledge, what are you going to build with it?